Hey everyone, this is Jonathan, Will, and Jessica here from Weekly Wallet Wages, and today we've got a special for you, a nice little exclusive about credit analysis, and what you should be doing to build your credit if it's on the down low.
What's up, y'all? Thanks for having us, John.
Hey. Awesome. Yeah,
hey,
so
Jessica. Good to see you.
Yeah, we've all had personal experiences dealing with clients with poor credit, and all of us working somewhat in the world of finance, me as a banker and Will as a financial specialist in general terms. We've all experienced some form of level of finance or credit reporting. So I thought we would have a great talk today. All right, I'm sorry, we should just cut this.
No, it's just going good so far.
No, that was awful. I kind of like. I felt like I just started repeating things over again. We gotta do that again.
No, it's good. So credit. It's funny. I knew we were talking about it tonight. I may have to blur this out. I've got my 2 credit cards right here. I don't want them to show up on screen, but because I was thinking about it, I actually paid them both off this past week, so 100% of my credit's open. But it hasn't always been that peachy for me with credit. We have a lot of stories, and so we can go with this wherever you two want to. But yeah, I think it's a great topic.
Okay. Are we gonna go? We can go ahead and start the recording now.
Yeah.
Okay. Oh, that first part.
Done. We're not actually going to cut this.
Okay. Well, I was just saying that first part was awesome.
ABC right now. It doesn't have to be perfect.
Okay. All right. Now we're gonna start.
Just 3 deep breaths.
Okay.
Our first podcast. All right. No. So, what did you want to tell us about credit?
Yeah. So, I guess what I wanted to talk about was credit analysis and just in general. One thing I see is people applying for loans with these really low credit scores, and the dangers involved with that. Because oftentimes, credit is kind of a way of people going to others or going to the lender specifically and using it to be like, hey, I am worthy of borrowing money from you because I can pay you back. It's basically, credit, your credibility. And I think it's important to talk about that because people, as their credit score gets lower, they get these awful interest rates, and you should really question if taking a loan is worth it if you're going to end up with 14% on an auto loan.
I actually have a question about that before we progress too far. So, Jessica, in your world of sales, a lot of times there are certain products or things that I guess y'all sell that involves applying or not applying, but either running the client's credit history, right? Because if the product involves like funding money on an invoice or whatever, credit can be involved. When y'all do that, do you actually run a credit check on somebody, or is it just a soft check?
So we actually run a credit check. So we take people's social, driver's license, and we put it through our systems. And I believe that they need something like over 575, which isn't too bad for the one company that I was working for. This other company, though, is going to be a little bit more of a hard check due to the immense amount of money that it costs for this one purchase.
Gotcha.
But with hard checks, it always goes back, I believe. Is that wrong?
No, so that's what I wanted to ask, because you were kind of going on this subject of when people are shopping or getting things and they have people run their credit, and that's I kind of wanted to bring that into this question, John. Is it bad, or how does that affect that?
So I guess it kind of depends. That's why it's so important whenever you're buying something that involves like a monthly payment of some sort or doing any form of lending, asking them whether it's a soft pull or a hard pull, because a hard pull will lower your credit score just by that little amount. Now, depending on how many times you shop around every week, let's say you have a 2-week period, you go to several dealerships, it'll count as one hard pull. So you don't have to worry too much about that because the banks do understand that you're shopping around. Soft pulls don't really affect your credit score at all. That's where you find it on like Credit Karma, for example, where you have the 2 credit scores, the TransUnion, and I believe it's either Experian. Actually, I think it is Experian. But that's where you get those 2 credit scores and they're soft pulls, weekly soft pulls. So it's not going to affect your credit score. Now, when you go to like a dealership and you're going to borrow, a $25,000 vehicle, or put down for a loan $25,000, of course they're going to do a hard pull, and those inquiries, or hard inquiries are called, they'll bring it down a couple points. So it's always important.
By the way, I mean, because Jessica, you do this for a living. Jonathan, you consult on this. If you're going to do does a soft pull actually ding your credit by any points? And if so, how much? And does a hard pull, is how many points? You said it can hit it by a few points. So, I mean, how many points would a hard pull actually make your credit drop?
So there's no true way of saying how much it could affect your credit score. A soft pull doesn't ding your credit at all, but the hard pull, and by the way, later on, I'll also mention how to get your credit score for free. You get one free pull every single year. But the hard pull, it varies. It could lower based off of numerous factors. So I can't give you like a set answer on how many points it'll lower it by. It could be 2, 3, 4 points. It could be 10 points. It just kind of depends on, I guess, how much you're looking to lend, and who's requesting that. So.
Okay. Yeah, very good. Do you so on the subject of credit, I guess while we're still here, if somebody's looking for a credit card or looking to get credit or to build their credit, what are some good credit lines and companies to work with? And then more importantly, what are some of the ones that would be good to stay away from?
So I guess a better question would be like the benefits of the credit card. So the company, not too much. I don't think that matters too much. A lot of the financial institutions, at the end of the day, a credit card is just lending. It's unsecured credit, or unsecured line of credit.
So maybe things like annual fees or interest rates are more important.
Yes, the things you want to look at are like annual interest rates, the cash back, if it has like a point system or a reward system, different things that will meet what you're looking for. Like like American Airlines and United, they have like these rewards cards for miles on airplanes.
But the difference they don't tell you what those is the miles system is far different than it was like in our parents' and grandparents' days. Back in like the 70s and the 80s. Back then, you took an airline flight or got a credit card with some miles, and like you could actually travel. Now, like with how they've changed the algorithms or the systems where you need like way more miles or like points to convert to miles, and
60,000 miles to take a $200 plane ticket.
Like the whole frequent flyer miles program is not as good as it used to be.
Yeah.
But that's a good point, though. Actually, one of the cards I held up a moment ago, it's right here. It's my Discover It card. It was offered to me when I was a student at UNC. I was a freshman there, and I guess they sent these out to all freshmen that they were eligible to apply for it, and I got it. And I've had it ever since, the last 10 years. It's got a $2,000 credit limit, but the Discover does 5% cash back. So I use it because, things really only cost me 95% of the actual cost if they kick 5% back, and there's no annual fee.
You started with the $2,000 credit limit as a secured card for your first credit card?
No, I've never had a secured credit card.
Never?
Unsecured credit. Yeah, we should talk about credit because it's not really credit. What you're doing, and I want to get both of y'all's opinion. I'm glad you brought this up, Jessica. But I was telling John earlier today when we were talking, I feel like a secured credit card, where you have to give a bank money so they can then loan it back to you at an interest rate that they charge you. Really, you should be getting paid interest from the bank for letting them hold on to that. But it's so backwards, it baffles me that secured credit lines are legal. But I don't know. Yeah. Usually, if you have a secured credit card, it has a very low credit limit because you don't have the money to be able to get big credit. And if you have that much money, you ought to just be able to borrow it from yourself and pay it back. But I don't know. I don't want to go off on a tangent. I want to hear what y'all think about that.
Yeah, I have to agree with Will. It's kind of kicking himself in the butt.
it's kind of good though for like say somebody who's 18 or 19 years old and they have no sense of financial knowledge whatsoever.
Yeah, so I'll agree with you there, Jessica, because I think your keyword was sense. And the thing is, like, John and I's point, it's like, well, if you let's just say it's $1,000 secured credit card. Like, if you have the $1,000 to give the bank, like, you should put it in a savings account, borrow that money when you would normally need it to use on your credit card, and then pay it back to yourself in your savings account to avoid paying the interest on the secured credit you got.
You could set that money in a money market.
Yeah, like Jessica, though, a 19-year-old may not have the sense to have those good financial stewardship principles. So,
yeah.
You know, one thing that I think a lot of people overlook when they get a credit card is, as you mentioned, at the end of the day, debt is debt. You know, you're borrowing money essentially. Now, if you have that money to pay off the credit card, that's good and all. You know, like back in the day when I was 18, 19, I was using my credit card strictly for like buying gas. I used it for whenever I'd go out to eat or something, just small purchases like that I knew I could pay for.
I have no doubt that you were like the hyper financially responsible kid.
But yeah, and it's one thing though that people need to recognize though is like you can have a low limit on your credit card. And you can make purchases with the credit card, but you got to remember about the utilization aspect of the credit card, or all your debt in total. You know, normally you want to keep that around 30% or lower. So just because you have a credit card, like, yeah, you can make a $400 purchase, you know, on a $500 limit credit card, or a credit card with a $500 limit. But at the end of the day, that's super high utilization, and it'll reflect poorly on your spending habits. So I guess the credit card, if you're looking to build it, like make the small purchases, build up that payment history, pay it off every month. And the best way to do that as well is when you are making payments on a credit card, check with your financial institution on when that interest begins to accrue. That is something you definitely want to avoid on the credit card as well, because I literally in the mail earlier today I got a offer from Capital One. It was like 23.99% interest. I sat there, I was like, you're kidding me, right? You're joshing me. Like, that is awful. That is absolutely, that's robbing people for their money, you know.
I love how you're calling Capital One out on this podcast. That's awesome. But no, I mean, you're right though. They do send those offers, and you know they put you're pre-approved, and you know, or they put a fake plastic credit card in there for you to feel like it's something for you to send it back and get the real, you know, all that. But they don't always. What's that?
I said it's a marketing tactic.
Yeah, exactly. But they don't, you know, they don't broadcast the interest rate that you were smart enough to look at, Jonathan, at the same time. And it's a dangerous thing. You know, people have been, you know, talking about things like the opioid epidemic or mental health, or you know, these other subtopics that, you know, get popularity every once in a while in America. But what about the credit card epidemic? I mean, that's been massively affecting millions and millions of Americans and ruining lives, and I mean, doing wild things for years.
Buy homes.
What's that?
The lack of being able to buy homes and home ownership because of your credit score is too low. I feel like that one's a biggie.
That's a big one. And heck, I mean, we were just doing a show. It's funny you bring that up, Jessica. I mean, John, heck, last week we were doing a show on home buying in this market, and started it with how credit affects it. So yeah, that was a good topic.
Almost 580, you know.
Is that what Landon said? I was trying to remember today what it was.
I think 580.
580 to buy a house.
I would not recommend buying a house if you have that low of a credit.
I feel like you'd save more money though if you bought a house instead of renting out a house. Because, like, if you bought a house, like, you can pay it off, rent it out, have somebody else pay for it in the meantime, and then just, like, I don't know, like, invest into an Airbnb.
Or you get all your money back. I mean, every time you pay a mortgage payment, you're going to get that plus more back in return when you sell the house or cash out or retire. I mean, whatever, however, you know, you manage that. But, I don't know, what do you think?
I guess it kind of depends on your situation. You know, like for me, you know, I plan on traveling the world for a little bit when I graduate. You know, for me to buy a house right now, I just feel like the hassle and the opportunity cost of how much time I'm going to have to put forth to it is probably not as worth it, especially in today's market. Like in 2 years from now, if I were to buy a house right now, 2 years, it might be worth a couple grand more. But if you're
that's the point though, because like houses are like crazy expensive right now.
Yeah,
And what's that?
it's a seller's market, not really a buyer's right now.
Yeah, it's a good point. Yeah, thank you. It's definitely a seller's market right now, which is I like. I mean, there's a lot of stuff I'd like to like. So funny. I don't want to get off on a tangent. I was looking this past week at jet skis, and like a few years ago when I was wheeling and dealing on Craigslist, like there were more jet skis and boats and 4-wheelers like on there for sale than you could shake a stick at. And they weren't very expensive. Now, if you go on Craigslist, like all that there is are like wanted ads, people trying to buy them. Like you can't like the whole supply. It's I don't know. It's wild. But yeah, it would definitely be better to buy a house once this market crashes. But is it ever going to crash though? That's an episode we need to have. I mean, what is this market going to do?
You know, everybody says that it'll crash. People say it won't. The Feds are keeping interest rates low.
10 years.
I think there's a lot of factors that go into that. And yeah, we should definitely do that on another episode. But one thing that really scares me, though, is people have kind of lost a sense of the value of currency. You know, one thing that I've noticed, you know, when I'll be talking with other students, you know, because I go to college, I have barely any debt. I have like maybe I think 2,000. All right, and I could pay it off. I'm just keeping that line of credit open for that history.
$2,000 don't count as having debt. That's nothing.
Yeah, and I've heard of like people having like 40 or 50,000, being like, that's not that bad, and I'm sitting there like, what? You know, like.
Those people need to Dave Ramsey up.
Yeah, my goodness, that snowball over here, you know. I just thought it's crazy, you know. But, yeah, I think it's better to be out of debt versus in it in most situations. Like if you can buy a house outright, I mean, definitely depends on the market, but that's probably a better idea than, you know, I guess taking a mortgage out on a nicer house, a lot more expensive, or especially in today's market, I feel, you know, in the seller's market, as Jessica mentioned, it's right now buying a house is probably not the best idea. It's definitely overpriced. You know, in Colorado, you're talking like half a garage going for $400,000. You know.
Yeah, it's wild. I mean, even, you know, like I forget if we've talked about it or not, Jessica and John, but like the building materials cost. In North Carolina, it's $45,000 to $50,000 for an average like $250,000 home. What would have been, you know, just because the price of wood and building materials has gone up. That happened during COVID with the shortage of workers and manufacturing and all that. I mean, there's just such. I don't know, it's wild. I don't think any of these old, gray, white-haired, you know, economists that were sitting around and spectating the last 10 years on what was going to happen with our economy, none of them have been right, so.
I feel like society as a whole is unpredictable, and I think, like, we can guess what direction it's going to go, but at the end of the day, it's a guess.
I feel like you can make a logical guess or assumption on it due to the fact that history always repeats itself.
Yes, it normally does, which is why we've established patterns to predict things. But that's my point, Jessica. It's like history hasn't repeated itself this cycle. We're seeing all kinds of new things. Cryptocurrency is a whole nother thing that's been thrown into economies and the market, and you know, our stock markets. I mean, I'm not sure they're playing by the same rules anymore. If so much of the money that's being moved through is not based on the U.S. dollar and corporations and what the U.S. government does to it, because that's the beauty of cryptocurrency, is it's not tied to any government, any corporation, any economy. NATO has nothing. I mean, so it's untouchable by what the normal historical patterns that have affected the market.
The scary thing, though, is the government's trying to tax it. You know, they're trying to put taxes on cryptocurrency earnings. So, you know, like these different companies like Robinhood or brokerages.
I didn't know that.
Yeah, like Robinhood, like they're trying to get you to report cryptocurrency on your taxes.
Yeah.
Yeah, I didn't do that. I filed taxes this past week, and then no, it doesn't belong to them. I just say cryptocurrency is not tied to any government, any economy, any corporate. Like, that's not how it works.
Hey man, hands in your pockets, They're gonna try and...
It's so weird why the feds don't want to have any banking things to do with the legal cannabis trade in, what is it, like in 38 or 40 states out of the 50 now? You would think out of all those billions of dollars they would have gotten greedy by this point, but
Yeah.
I don't know. I mean, you're the banker. What's the laws on that now?
About marijuana and all that, I don't know too much.
No, I mean, not about marijuana, about the federal banking laws around receiving cannabis-made money in states where it's legal.
I have no idea about the reporting that. Things like that, I would probably recommend a tax consultant or an accountant.
We need to get them on this show.
Yeah, we do. That'd be a question we could ask them too. Yeah.
You know somebody who you don't need tax guys, Jessica?
No, mostly just like real estate agents and people in that nature.
Oh. Darn, he's worth a shot, John.
Yeah.
I have a buddy of mine who's an accountant. I can ask him how he would report that.
Cryptocurrencies?
Probably cryptocurrency. He does a tax. He's a tax accountant. So, but he works for a much larger corporation.
Yeah, we need to get him on. We'll see if we can get him next week. That would, yeah, and me, you, and Jessica will talk to him and hammer away at questions about taxes and cryptocurrencies.
Yeah.
Since it doesn't matter what the subject is of the podcast, we always end up reverting to cryptos at some point in the dialogue.
Yeah.
Sometimes they're born in like the 40s or the 50s, like when credit scores didn't exist and you'd have to have face-to-face interaction with the entire world wherever you went. But,
oh yeah, that was back in the days when you needed a loan. You actually had to go into the bank and convince them face to face. And it was all about presentation. Men were getting up in the morning early to get their tie right. They were getting pep talk by their wives, told them it was all going to be okay, and they were going there to lie their ass off to get a bank loan before credit.
It's a lot of ass.
Yeah, a whole process. But now, hey, you can do it online most of the time. A lot of places.
That's a good point. We're on the subject of credit right now. I didn't even think about that, Jessica. You were talking about the timeline. When did credit reporting become a thing? Was that after the internet and AOL took off, or was that? I mean, was it before then and certain people had access to it? I mean, does anybody have access to Google when credit reporting came about?
It came about around the 1950s with two statisticians named Bill Farrell and Earl Isaac. It took the 1970s for the score to be seen as important to lend as it does now. But it was definitely in the 1950s.
It looks like 1989 was when the concept of credit scores started and would evolve today into the most popular scoring model, a FICO score. It looks like it was engineer Bill Fair and mathematician Earl Isaac developed the first credit scoring system in 1956, but in 1989, that's when it became an industry standard.
All right. I'm glad y'all brought that up. By the way, both of you, just off the cuff, fired far more detailed answers to that question of when credit reporting became a thing than I even expected. So kudos to both of you, because that was impressive. Baker, was that Earl Isaac?
Yeah.
Earl Isaac.
Fair.
All right. Let's talk about him for a minute, since I got the both of you here. He, a mathematician that invented the credit reporting system. Now, we've talked about some good things that exist because of this credit reporting system. We've talked about some bad things and how certain things were better back in the day, Jessica brought up when she was talking about the 40s. Earl Isaac and his invention, good guy or bad guy? Ultimately, did he do something good for the world, or did he create a monster? I'm curious for y'all's opinion. We can vote on it.
I think it depends on the situation. I think the problem with credit nowadays, it's been skewed to where you can't win no matter what you do. If you buy a car, your credit score drops. If you make payments, it goes up.
He's a mathematician that created the algorithm. Did he create a monster, or did he save us?
I think it's one of those situations where we thought it was going to be a good thing at first, but now people are being judged by a point system.
That's like everything the government touches, which is what you just described, where it starts with good intent, and because of the people who created management, it fails.
I think,
Dang, we were just talking about credit card. Our agenda was talking about credit cards. We've been going after Capital One. We've been going after the government. This is an intense call.
yeah. With credit reporting over time, it's gotten more and more advanced. So now it's including things like, now there's different versions of credit reporting. So like TransUnion, there's version 8, version 7. Financial institutions each use different types of credit reporting. Some of them include medical payments, delinquent medical payments. Some of them don't. There's so many different ways to report it. But me personally,
It's getting better.
huh?
All right, so you're saying this problem is getting better?
It kind of depends on the financial institution. There's always going to be greed out there. At the end of the day, there's not much of a difference between your friend lending you money and a bank lending you money. The only difference is that the bank wants some return.
That's
And
All right, so, what's your answer? Thought Earl Isaac, great for humanity, or did he create a monster with credit reporting?
That's difficult because I feel like
Not a simple answer.
no, I feel like having a credit card is a lot safer than carrying around like a bunch of cash on you everywhere. Like nobody even carries cash in them anymore because of it.
It is, but didn't they still have credit cards before they had credit reporting?
That would be something that I would have to Google. I'm not extremely knowledgeable on timelines of that area.
Okay, I just figured that Earl Isaac was creating a solution to this new credit boom. I didn't know. Because usually, not always, usually the government reacts to human and mankind progression changes. They're not ahead of the curve. Like, somebody murdered somebody before they made murder illegal. Obviously everybody gets that, but I don't know. Are you looking it up, John?
Yeah, so it looks like in 1950 is when the first credit card came into existence. So I'd assume it was way before credit reporting, because it looks like
Hey, Isaac, was that in the 80s when he came up with that?
it was like in 1989.
Okay, yeah, so you're right, John. So there's a 30-year gap, or almost 40-year gap between 39-year gap between when the first credit card came out and when they had credit reporting. Gosh, I bet people got away with some shady stuff before. I bet there was a real need for them to come up with a credit reporting system.
People still do, people a lot of the times, like, what if they, let's say unsecured, lines of credit, let's say they got a HELOC or something. Well, a HELOC is different, but let's say they got a credit card and they do a $20,000 cash advance and then they disappear. At the end of the day, the bank's going to have to write that off their books if they can't find them. It's going to be a charge off. So
yeah, that's a good point, because back then, wasn't there all kinds of fraud, and I didn't back before there was the internet and IT where it is today. People were faking passports and fake IDs, and all that stuff was a lot more prevalent before there was an electronic system to check people's social security numbers.
yeah, that's actually a good point. That is a good attribute of the credit report system, simply because you can see if somebody's applying for stuff in your name, because it's a universal reporting system. A lot of lenders use it. So you can, it's good to take a look at your credit report every once in a while, because if you see it, 20 points drop, and the next thing you know, somebody's applying for a car loan in your name, that's the first red flag. And also, I would recommend people, if they have any identity fraud or anything like that, you can go to identitytheft.gov and report it, and then do a credit freeze with the bureaus. And I would recommend.
Could you repeat that website one more time for us?
Identitytheft.gov.
Identitytheft.gov. Okay, that's probably a good one to remember, just to check on annually, if anything, just for yourself, I would imagine.
Yeah, and on that website as well, they outline steps on how to protect yourself and your credit, and how to freeze everything and keep yourself safe from identity theft. So
Very good. That's a great tip. Thank you for bringing that up tonight. Because I mean, I guess I don't know what y'all think. I mean, that's one thing that's scary about it is, that can always be happening without you knowing about it. And there's probably a lot of people that wonder, how can you, other than checking all of your financial statements every month or calling every financial company that exists. I mean, it can be kind of hard to know soon, know before it was too late if somebody had hacked your accounts and was taking out lines of equity or credit or money in your name. So, yeah, I would recommend that. identitytheft.gov. I've got it written down. Thank you for sharing that, John.
Yeah, of course.
You're quiet, Jessica. You got anything else for us?
I'm sorry, I was on mute because my roommate's singing right now, and I didn't want to interrupt.
It would have probably been interesting. It's okay. We're about out of time tonight, so I wanted to circle around just to see if, John, thank you for preparing this and sharing this. I've learned a few things myself, and this has been a great refresher. I mean, credit is so prevalent in America. I'm sure the three of us, Jessica, John, and me, I'm sure we're not the only people that get those credit card offers in the mail all the time. And it's a temptation, a liability, and an opportunity for probably about every American. And so I can't stress how important this stuff is.
Yeah.
I appreciate that website too. I was honestly logging onto it while you were talking about it.
Yeah, it's
Make sure your identity has been hacked.
Yeah, it's not to scare people, but it's always something to take a look back and think in the back of your head, like if this were to happen, Like I said, it outlines all the steps for everything. It's a really useful website, and it protects you financially. So.
Well, very good. Thank you for sharing, John. And if y'all don't have anything else, we'll go ahead and wrap it up now. Thank y'all for joining us. This has been Weekly Wallet Wagers, Episode 3 with John, Jessica, and Will. Please like and subscribe for more, or check us out at willsworldchannel.com. See y'all next episode. Later.